chance for free products, and an award-winning broker. Now, back to the A1 Trading Show.
All right, and we're back with Chris. Hey, Chris, how's it going, man?
What's up, Nick? Happy Tuesday, man.
Happy Tuesday. We're back from the long weekend. Did you have a good Memorial Day?
I did. It was a full day. Nice long hike yesterday in the morning. The weather was beautiful, and then did some playing lessons in the evening. So got on the golf course, had a full day we'll start around 8 a.m. Didn't touch the markets, just no chart alarms went off. So pretty easy day. Great weekend. How about you guys?
Yeah, I was up at the lake for the weekend with the family and my wife. It was awesome. We had a lot of fun just getting away from the charts for a little bit. It was nice.
Yeah.
It was beautiful outside this weekend, at least where I was. So that's awesome to hear. You had some good weather too.
Yeah.
And now things are kind of moving again. We got some the markets are back awake. They're alive again. Dollar index is down a little bit. Stocks are, slightly red here this morning. It's got gold and silver doing their thing up a little bit. Bitcoin, Ethereum down, and currencies all over the place. What are you watching here today, Chris?
I'm watching a little bit of everything. I have Snowflake from an earnings play last week. I'm looking to see if this will push just a smidge lower towards 150 to get me out with some profit. This week we have some earnings plays. There's not a ton of companies reporting, some notables. It's a big retail week. If you look at, we have Chewy, Dick's Sporting Goods, Abercrombie Fitch, American Eagle, Best Buy, Dollar General, Foot Locker, Ulta Beauty, all retail, kind of the health and consumer consensus. And then also some oldies but goodies. Can HP come back and get into the AI space? How about Dell Technologies, Dell Computers? Costco, big one as well, that really has had no signs of stopping. But Costco is up to 806 and change. I'll share my screen here so we can bounce back.
Costco, Chris, has been a stock that I feel like just for years it's just a killer company. Like it just has like very few dips. I mean, even look at 2022. 2022 was like sideways, and everything else was just straight up. Just
it's been. I mean, are you a Costco member?
Yes, I am. My wife had one, and we just got the family extension. So yes, I am.
Everybody that is a Costco member, if you talk to them, they all love it. I mean, I've had a Costco card for 5
have you had a slice of pizza there, Chris?
Listen.
Oh no, Chris, you can't tell me you don't like.
Of course, I've had their pizza. No, I've had the pizza. I'm not knocking the pizza, but my only beef is why Pepsi products?
Oh yeah, no,
that's it. Like why Pepsi products and why not both? And it's like they're Pepsi. Sam's Club.
I'm so with you on that.
Sam's Club has pretzels versus look, the pizza's great. I've never been to a Costco that's not slammed and obnoxiously busy.
Yeah.
But here's what I say. Personally, I've shifted into I just keep my stuff online. I do not stick with the budget. I do not stick with the list. If I go to the store, it's too tempting to have oh wow, this is for half the price that I thought it'd be. So
yeah,
I ordered online and just get it shipped to me, and that way just stay on budget with what I want. So that's me. I'm trying to be a little bit more conscientious of I don't need just stuff, But everybody that's a member loves it. And so looking at the stock, I mean, yeah, it's up to 805. We have earnings this week. I mean, I'm curious what the expected move is going to be. I can actually look at it right here. IV on Costco is probably, 56.4. It's up there. Earnings, I think it's aftermarket on, where's it at? Aftermarket Thursday. So if I did a play on this at all, I'd probably do the expiration out into the first week of June and look to see if the market gets excited about Costco. It maybe does not. I mean, Walmart had a pretty big surprise, so I would kind of lump Costco into this category where Walmart at $60 broke to some fresh highs. We had another push up to 65. There's a play that we talked about in my trading room where it was a 60 by 65 long play, and it'd be up $5 right now. You max out your profit today. So I mean, that's possibly what I see Costco doing as well. Would be decent earnings and a push higher. Does it break to all-time highs? If so, I think that if we break to all-time highs, it's something we get fade. It'll fade eventually. But let's go back to talk about last week, right? We had NVIDIA last week, and that put a little bit of a top in on Thursday. One thing I'm watching for the next couple weeks is, Nick, do you think that we can carve out all-time highs? I mean, Edgefinder shows June, July, August, historically bullish. I know the market's digesting a lot of stuff out there. Now the rate expectations for the Fed is November, December. If we have one cut, Goldman Sachs seems to say there's going to be no cuts. I technically would like to see a bit of a pullback, but I don't know if we're going to get one. I think we might just kind of continue to drift into summer trading. But here's what I'm watching the most. Why are we seeing such low volatility? That's what I want to know. The SPY is 4.5, dude. This is like in April, this was 40. Like, volatility has just shriveled to nothingness. And even my VIX play, I might end up losing like $2,000 on VIX because I'm hedged out to August just to see if this has a little bit of an uptick. If I get to $16, I'll make, I want to say $1.50 profit. If I get to $20, I'll make about $4.50 or $5 profit. But I don't know what's going to be the catalyst to drive us higher right now. Like what is it going to drive volatility? What do you have?
No, it's you're right with that. I mean, the VIX was trading recently as far down as almost 1150, which is just a crazy, drop in volatility from that 21 that we saw in April. It dried up quick with that, that April dip got bought very aggressively. And that's what happens when you get kind of V-shaped recoveries as volatility goes to nothing. And the thing is, Chris, trying to call the top when the VIX is low is like so difficult. I mean, when that VIX is low, it invites layer after layer of investors who are comfortable now again. And so, you got to think about like what's happening is like the average person who has money sitting in a money account. That's a force that I don't want to try and fight. Like people who are sitting in money market accounts and they're seeing that the stock market's ripping higher and they say, hey, you know what? I have money sitting, like I might as well get in the market again. Like that's what's happening, I think, is things are kind of getting the all clear from the Fed, and the common person combined times an entire population of people just flowing into the markets right now is a powerful force. In 2022 was opposite. Everybody was terrified and people just were like, just lock it in bonds. These are great opportunities to buy bonds, and that ended up being a great trade in 2023 was to not do that and to actually take advantage of the people who didn't want to take any risk. So I think right now that trade can keep going for a while. I do think that we might be back for now at like the 2% pullbacks, and then you see pushes and maybe just kind of controlled, slow grinding higher for a little bit. But that's kind of where I lean. I continue to really like gold, Chris, just as a soft hedge to gold and silver, as a soft hedge to the idea that if this is not just a soft landing, if it's a little bit rougher than that landing, gold and silver might hold up okay in relation to the stock market, which could have a pullback. But as you mentioned, seasonality for the months ahead looks pretty good. Here's the month of the year scanner for the S&P 500. As you mentioned, May, June, July, August, all expected to be a pretty prosperous time, historically speaking, in the last 10 years for the stock market. In fact, a notably strong pattern emerges as we are in May. This is held up to its case being a strong month. June, July, August, we'll see if those continue to be good. But doesn't mean you might not have, here we are 5% up. We might have 3% down, and then come back and break even or something like that. Like you might still have some pullback opportunities in the meantime. I just don't know what those drivers are.
Yeah, I mean, I think that's maybe the driver is that there's nothing to stop it. Maybe that's the catalyst, is like nothing bad enough is going to spoil the market's little party to the upside after we recover from the April dip. So, I mean, I'm looking at prices today. I mean, with the IB so low, I mean, I was looking this morning, it's like, could I do a bear call spread, bull put spread? Possibly. I mean, I just closed out. This is interesting. I am starting to clean up some positions. I had a strangle on the SPY. I have a bunch of ratio spreads running right now. So my SPY position, I had a strangle on, and all that means is I sold a call, out of the money call. I sold an out of the money put. I collected almost $4 on that trade, and I closed it out for a 25% gain today. And that's only been on for like 2 weeks. So, I mean, this like just complete retraction in just volatility has allowed me to like collect that premium pretty quickly. And I don't have to wait until, July to take the full trade off anyway. So, I mean, I'm just taking the profit. I might put the same thing on, but my concern is if you're selling options now, like if you're just premium collecting and selling options now,
tricky.
You got to be mindful of like that VIX could spike, and it's better to sit on the side. Like this is just a kind of a classic lesson in selling options. Right now, the volatility is so low. I hate buying options, but it almost favors you to buy. Like anyone that's holding leaps right now is probably happy that you're just seeing the slow drift, and like you're still getting an extra premium, and there's still some, you know, extrinsic value out there for the time that's left in those leaps going into like December or January of next year. But I don't know. I mean, this week, for example, and this is what I said on Friday last week, with NVIDIA's candle, we might do nothing. You know, it's like I think there's enough interest this week that maybe some individual stocks will pop here and there. Costco could have a big week. Maybe, you know, HP and Intel do something fancy in the AI space. You know, I have some exposure. I mean, I'm interested in taking a trade on Costco, but I'm not looking to fight this. I mean, if Costco has a surprise move, I want to price it out, see if it's something I can play. In fact, while we're at it, I mean, let me see. I'm just curious what the typical report is for Costco. I feel like they're probably a single-digit earnings play. I mean, their average move is about 5%. So I mean, we're trading at $800. I mean, obviously there's some decent movement there, but it's all about how I can price it in. So if we go 5% on an 808 stock, that's a $40 move. And let me see what it shows here for the Ivy rank on Tasty Trade is 56. Earnings is aftermarket Thursday, so I don't think Friday is a good time to manage it. I go out an extra week. This is showing an implied volatility move of around $35.40. So again, $35 to $40 expected move. As long as it's cheap enough to do something here, we're trading at 808. If I did an 810 by an 805, you know, I'm paying for that entire implied volatility move, which is kind of the debate of if you want to be a long option player, if you want to buy options, you want to sell options. If you sell options and it blows through your expected move, you're toast on that. You're gonna have to make these adjustments and do these inverse relation or these inversions to your trades, and that can be a little tricky at times. But if I just bought it, I'm having to pay for every dollar and then some of the expected move, and that makes it tricky. So
that is tricky. Yeah,
I'll debate on it. I think right now, I think I'm happy just having cash at the ready. You and I talk about this a lot. I know. I mean,
cash is a position, you know, it's like sometimes it's really, it's not a fun one when the market rips higher and keeps going. But when it finally dips, I mean, again, you know, there's ways to wait patiently, especially I know where you're going with this. You know, you got ways to park money and still collect something, even just for waiting.
Yep. There's all sorts of ways to do it. I'm putting on a couple of instruments. So in Tasty, when I was at that Seattle conference, there's ways to stash some money here. SGOV and BIL essentially pay the risk-free rate. So one of them is a 0 to 3 month treasury bond. The other one is the short-term 1 to 3 month. So either way, it's like it essentially is paying like the effective rate of 5.3% just to park it. You're getting that compounding every month. You can borrow against it if you want to, but cash is certainly a position. Nick, you mentioned earlier, you know, these people that are sitting in savings, sitting in money market instruments, you know, possibly looking to participate in the equities market. Here's how it unfortunately happens a lot of times. When the Fed starts to cut rates, and all of a sudden you start looking at 12-month money market instruments that are currently trading. If we went to, I mean, let's just say right now they're trading there between 5 to 5.25, roughly. Okay, risk-free rates around 5.3. So if you look at a CD or a certificate of deposit or money market instrument right now, you go to a bank or credit union and you're like, look, here's 12 months. What do I get for this? It is probably in that 5.5% range, give or take. As soon as that starts to be 1% less or 1.5% to 2% less, that's when the people start leaving their risk-free returns of a money market and they start to participate more in equities. Unfortunately, that's when I think we have a top in the market. Because I think those people are going to be so late to participate in the market that they're going to be, and look, it's not going to be the exact top, but I think that's the blow off, right?
That's a good point. Yeah.
Where they're getting back in because the coast is clear. But the reality is we could be overheated and overstretched from October of last year. Because if we have October of last year and it carries all the way into this year with an election year and Goldilocks and all these things kind of happening, the Fed's getting exactly what they want without having to do anything. All they're doing is just mindlessly saying the same thing every month. And it's like, what do they do? Up, down, up, down. Nobody knows what the Fed wants to do, except it's just jawboning. And I don't think they're going to do anything. I think they're going to see how much can they lower inflation by just letting the economy do what it does. Which, what's interesting, I listened to a podcast this weekend. Most of the time, the economy just hums along. And I think that we're expecting like this big hot economy or this big crash recession. It's like, what happens to just the status quo? What happens to just the market just, carving out 1%, 2%, 3% gains? It does what it's supposed to do, which is pretty boring. But instead, we just expect wild swings to happen, and I just don't think it's there. So anyway, I think it's path of least resistance. I don't see a lot of catalysts right now to drive the market, dramatically higher with a ton of volatility or dramatically lower without some type of, one-off event. But NVIDIA kind of renewed the hopes of AI once again. We're at these highs. The market's carving out these gains. We simply had a V bottom from the April correction. So I just say we're in orbit. We're drifting. Summer historically is a good benchmark to expect the market to continue to go a little bit higher. So I'm not trying to fight it, man. That's all I'm saying.
Yeah, no, I think you're right about that. Like sometimes it's okay to think like the market doesn't have to be crashing or ripping. Like sometimes it just moves slowly higher as it usually does. So yeah, should be interesting to see. Chris, I'm gonna leave you to take over the show for a little bit. Frank is back in the office, so you might be seeing Frank in just a few minutes.
All right,
which, the man himself. He's a world traveler now. So
exactly.
yeah. So I'll leave you to it, Chris. Before I step out, guys, if you have enjoyed listening to Chris Pulver, please do us all a favor here at the A1 Trading Show. Make sure to go subscribe, support Chris Pulver on YouTube. And if you are on Twitter right now, it's at Real Chris Pulver. You can find his handle there. Make sure you follow him on that front. By the way, consumer confidence did come out slightly better than expected. Dollar is up just slightly off of that. Gold kind of gave back its gains for the day. The S&P 500 continues to be slightly red on the day, but no drastic moves there. Chris, you got the show for a little bit, and I'll see you next time.
All right. Thank you, Nick.
All right. See you.
All right. Hey, really quickly, I have to make an adjustment in my Discord channel because this morning I read yesterday's Forex report for currency strength, not today. So that is my fault. Let me make a quick adjustment here. Pre-market, I was looking at everything. So SPY was up, Q was up, IWM was up slightly, DIA was lower. Oz New Zealand strong, dollar yen weak. That was totally wrong. So let me edit that right now. Let's see here. Let's do update. So edit. Swiss strong. And again, pretty quiet on the vertical axis. Dollar gaining post consumer confidence. And most FX pairs mixed. All right, I'm just updating that post. Usually when I start my live sessions in the morning, I'll tell everyone today's schedule, what trading rooms I'm in, what times they are. Usually it's very consistent day to day. But this is today's currency strength. So Swiss on top a little bit. Still one of my favorite trades this week or this year is being long against the Swiss. Aussie Swiss, CAD Swiss, Euro Swiss, Pound Swiss, New Zealand Swiss, Dollar Swiss. I'm long on all those currency pairs. Currently sitting on around 7,000 pips of profit. Not even touching it. I'm just going to let it roll, let it run. There's still a lot of upside potential for me technically. Getting paid for some positive swap, not worried about the nonsense of the Bank of Japan, which everyone wants to be in the Bank of Japan. Everyone wants to short and get stronger yen. Stop caring about the yen. That's my opinion. The yen is going to be, look, everyone calls natural gas the widowmaker. If you are a currency trader, believe me, the Japanese yen is a widowmaker. It sucks. It is one of the most irrational, non-obedient currency pairs that I've ever traded in the last 15 years of really being in Forex. So I don't like it. I know sometimes it seems like, oh, the greatest thing ever, but I'm telling you, to me, the yen crosses will be easy later, not right now, right? Like, for example, I'll make this really easy. And we've talked about this in a lot of sessions. People ask about the yen. Here's my opinion. Right now, we have an intervention high and low that most of the pairs are still stuck between the high and low from that intervention. The New Zealand yen has been the one that just broke recently higher. That doesn't mean it's the top. I'm not trying to call the top. If I want to trade the Swiss yen, for example, this is where I want to trade it. Do I think the Swiss yen has the capability to come all the way back down to these levels? Yes. Thousands of pips. But is it going to happen now? Not without obvious confirmation, right? And who knows what's going on. So I'm just putting out there my public service announcement to any Forex traders. Be careful on the yen crosses. I say this every day. I despise trading the yen crosses. I've said this for many, many years. You will make more money not trading the yen pairs than trying to trade. Because when it cooperates, great. put your trade in, get a good entry, and all of a sudden you're up hundreds of pips, move your stop to break even, and then watch this thing go for 1,000 pips or more. That's the easiest trade ever. That happens like 1 month out of the year, right? So good luck picking that perfect top or bottom. Good luck participating in that trade. It's a bull flag, bear flag currency pair when it wants to be. Otherwise, it is garbage. And it's, like I said, if it doesn't technically cooperate, it's challenging. I'm a technical trader when it comes to Forex trading, and the yen doesn't cooperate. So therefore, I'm trying not to waste my energy on trying to pick how to trade it when there's levels of intervention. There's a bigger, carry trade at hand. I don't see that unraveling anytime soon, especially this year. Bank of Japan has the same MO as the Fed. Price stability. They want to see higher equities markets. They're the Nikkei 225 for the first time in 34 years has eclipsed the drawdown highs from 1989. They want to see a higher index, right? The U.S. wants to melt up higher, as it always does. So point is, that's my PSA. Be careful on the yen crosses. That's all I can say, right? All right. Oil, gold, silver, common stuff. A couple things we'll check on. Let's go dollar index really quickly. So dollar index, we're starting to see, I don't like the area of the dollar. To me, this is still a bunch of noise. I have levels marked on here, 103.90. If I'm going to be a bear on the dollar, we got to break below 103.90. If I'm going to be a bull on the dollar, I want to see it get above 105.50 or 105.60. Until that happens, I'm letting robots trade the dollar. I'm letting it get beat up a little bit. Here's what I do in my robots. Typically, I do this. If I am trading both directions on my robots, okay, what I'm doing is if it goes up and somehow it loses, that trade, let's say, is a 0.01. Well, if it loses and then I get realignments and confirmations to take the other trade, it gets into a 0.02. And then the next trade, if it loses again, it's a 0.03. Okay, I'm not martingaling. I'm not doubling down. I just get in with slightly bigger trade sizes. And it tends to catch. That's my point, is maybe after 2-3 bumps, it catches the trend. It catches the move. And eventually, if the dollar does this or the dollar does this, I might be 1 or 2 or 3 trades into it, but eventually I get profit. And I talked about this last week in one of my classes. I mean, I had a 0-1 loss and an 0-2 loss, and then I had an 0-3 win, and it was enough to make net profit. So the robots in the background are trading that for me. My big positions in currencies are just long against the Swiss, and I'm riding that hard. And then Aussie CAD, New Zealand CAD, I'm bullish on both of those, riding those hard. And that's what I'm doing this year. My best Forex trading is riding my winners and trying to add to my positions. Okay, so dollar index, it's pretty tricky at this time. Gold and silver. I know Nick started to talk about this, and this is a common request. Look, I think that silver continues to look better than gold. Right now, silver still has room to play the catch-up trade. Silver has been outperforming gold. This chart right here is gold versus silver. Okay, you can see that we are clearly getting the upper hand by silver right now, which is great. My position I'm still holding, my bigger position overall is still long silver. I am long on gold, but I scaled back that position. I had call options and diagonals, and I had some shares. I closed out pretty much half of that position. I'm just sitting on a fraction of what I was sitting on before. I closed out a chunk on silver, and I'm still riding some silver. I want some assignment on some silver shares. SLV is what I like to trade, or silver futures. And look, I would love to see this continue to outperform, where silver gets the upper hand again and continues to drop all the way back down to these 2021 lows. And then we'll see if there's a turn. But to me, technically, if you look at XAG, we're trading at 31.67. I am bullish on this thing. I know we're getting some overextended conditions right now, but I'm bullish on this thing until we hit 35, almost $36. So if we get another $3 to $4 upside, that's another 10 to 12%. I will gladly stick around for the next, maybe 1, 2, 4 weeks to see if I can hit that level. This to me is a big target one. If we hit that level, then I expect to see a pullback, and we can pull back to this level and then resume some long positions. But silver to me looks better than gold at this time, but I am bullish on both of them. I think it's a nice way to be diversified, to be long silver, long gold, long Bitcoin, long copper. I mean, copper's been a great play this year. It's up like 30+%. I'm long on China, so it's a little bit diversified against just U.S. stocks and U.S. tech. So I think, look, that to me is a safe way to put a portfolio together, is whatever exposure it is, try to take away all the correlations, just the index. If you're correlated heavily with the SPY or correlated heavily with the S&P 500 or the NASDAQ, if that's all in, everything lines up the same way. It's like you're all up or you're all down. That's not fun. So we want to have something where if the market turns and dips and there's volatility, there's always something that's going to pay us, right? Forex can pay me. Futures can pay me. Scalps can pay me. Selling options can pay me. Lower my cost basis can pay me. All sorts of ways to stay diversified. Okay. Luke, are you asking about stop loss on silver? I mean, I don't really have one. I'm using more of a percentage-based stop loss. I have a position where about 3%, I'm putting about a 3% account side on silver. And truly, I've been in it since around $20. So I have SLV exposure here. If we get up to 35, I'm probably taking profit in my Schwab account right now. I own this thing in like the teens because of some selling options that I've done. I probably own this around like $17 or $18. And if I get that to, I guess it'd be SLV. So I own shares of SLV around $17 and change with this area. And then I've lowered my cost basis as well. So if I can get to nearly 100% gain on that, I'd be pretty happy. And I probably have, trying to think of my account. If I have 200 shares at around, we'll say $20, that's a pretty decent chunk of profit. I'll probably make about 5 to 6% for my entire account by having silver hit my first target. So SLV, this is my first target. It's around 32.75. My next measure moves all the way up here towards 44. So I'll say it again. I think silver is better right now. More room to run, more technical ways to get to the targets that I've measured, to hit symmetry, to have this market, do some technical things. Okay. So you're barely holding on? No, I'm definitely holding on. But I have a lot. 3% Bitcoin, 3% silver, 3% gold. Futures is about 5 to 10%. Index is about 5 to 10%. I got a small treasury position. I'm in TLT. That's small. I could probably do more with treasuries, but the bond market's tricky. The bond market's, it's weird. It's that, you're no longer getting like the safe haven of the bond market. Right now, it's pretty much correlated with stocks. If you want to see bonds go up, stocks have to go up. If you want to see bonds go up, yields have to drop. If you look at yields are not dropping, right? 2-year yield has been up since this bottom at the beginning of the year. You got to give the market credit. We've had a rally in yields. And what have we seen in the stock market? Yields have gone up and the stock market has found a way to carve out new highs. That's not usually the correlation, right? So that just shows like right now, bonds, which are inverse to the yields, they're moving non-correlated, right? Usually bonds are safe haven. And anyway, I think that, the yields right now continue to kind of grind higher. This is going to be the concern, is if the Fed cuts, or are they going to cut? Are they not going to cut? Are they going to raise? Noise. It's a lot of noise. But if yields continue to push higher, it is going to put pressure on everything, right? If there's, interest only, if there's corporate debt at 5-6% interest rates, if there's, residential construction at 8 to 10% permanent financing, these are brutally high. Listen to an interesting podcast this last weekend. If it wasn't for cheap money, Amazon wouldn't exist. If it wasn't for cheap money, Meta and Facebook and Google and Microsoft wouldn't exist. So we're in an environment right now that, I know everyone votes on tech. I know everyone's in NVIDIA. But the reality is most of the stock market is underperforming. Because if you have to fuel your company with debt, and it's not about making money, but it's about revenue growth, and it's about if it's about promise and hype, that's not what it used to be. So I guess my biggest concern would be what we had in 2020, or 2022, which was a big deleveraging down the road. Now, this might not be this year. This is an election year. Things tend to be ignored. We're ignoring a lot of stuff right now, as we talk about a lot. And that's what the market does. The market it's like it latches onto something and it goes. And right now it's latching onto, it's fine with the Fed. Inflation seems to be under control and tolerable. It's not ideal. The Fed's talking about 2% still. We're way above that at 3.5%. But the market doesn't seem to care that much, right? Election year, historically, it's bullish. Goldilocks, employment softening, consumers scaling back a little bit. That's good, right? So there's a lot of reasons that things just kind of hum along. And like I said, all I keep watching is implied volatility. If implied volatility on your indexes are this freaking low, it's just going to keep humming along. And we're going to notch these slightly higher highs. It's going to feel a little bit like if you traded this far back, it's going to feel a little bit like 2017, maybe a little bit like 2019. Okay, those were years that the market rarely dipped. I don't know if it was 2017 or 2019. It had to be 2000s. I'll have to fact check that. It's either 2017 or 2019. One of those years, the S&P was bullish every single month. It never had a losing month. So if somebody wants to fact check me on that, I know it's one of those 2 years, but it was green every single month. That's never happened in the history of the stock market. So, and that's not this year. I mean, we already had a pullback in April. So that's, breaking the trend there. But point is, it can feel like that type of mojo to the markets. Like it just keeps going higher, which is why it's not great to call the top, because if it's going to keep going, we're in this slow IV environment. Two things happen, right? Either this very low IV environment all of a sudden starts to expand out of nowhere, and we have like a nasty little sell off by maybe 1 to 3%. All it takes is a little cleanse, and then the market comes back in, buys the dip. Okay. One thing that's interesting, how many of you out there, let me ask a question in the chat. How many of you have heard the phrase, the Fed put? The Fed put. That's essentially like the backstop that the Fed has put in the market for a lot of years.
Hey, Chris.
Frank, what's up, dude?
Not much.
How you been, man?
Been gone for a while, but
yeah. Is it nice to be back?
It's great to be back. I was so ready to start. Oh my God, start trading again. It's fun being on vacation, but after 2 weeks, you're just kind of ready to start up again.
I know. We like to get back at it pretty quickly. I'm going to be out of town next week. I'm taking an international trip next week. Still to be determined, but it's good for a week. I like to decompress for a week, but after that, it's like, okay, let's get back to it.
Yeah.
So same thing, I'm sure, for you. Yeah, 2 weeks is a stretch, man.
Yeah, it was a lot of walking and a lot of drinking and eating. I got swindled in Paris.
What'd you get?
Some guy tied a bracelet around me at the Eiffel Tower, and then he said, now give me something for it. And I was like what? And he said, give me 20. And I said,
oh my gosh.
I said, I'll give you 10. So
you had to swindle the swindler, huh?
10 euros for a bracelet. I swindled myself.
Yeah, you did. Well, that's what you got to do, man. Well, hey, hopefully it's making a good living by just tying people up with bracelets, and it's a fancy way of panhandling. Yeah, it's tricking people into. At least you walked away with something versus like he just took something off he took your watch off your wrist or stole something out of your pocket.
I guess he could have robbed me. Yeah, that would go.
But. So, all right, dude. Well, you're back in the saddle. What are you looking at this week? What do you like?
More earnings.
More earnings. Yes. Earnings junkie now.
So we got. I am indeed. I was looking. I was looking a couple of times in Europe, and I was like, well, I don't know if I should take any trades because monitoring is going to be really hard.
Yeah.
But thankfully, nothing that I was looking at really did much except for Intuit. Intuit went really far down.
Was that good? Is that what you needed?
I didn't take the trade. It was so expensive just to, per contract.
Yeah,
so I stayed away from it, but I guess it would have worked out.
Okay.
But it's whatever. I'm looking at this week. We got Alta. I like Alta.
That's Thursday after market.
I'm in snow still. That expires Friday.
I know. I am too. I'm in it as well. We're trading at 154. We had the recent low last week around that low is 150. No, that's not right. That low is 152. So I have a 162.50. Right now it's up about $8. I guess. Look. The reality is I could do nothing, right? I mean, if this week's candle is coming off a holiday, we're finishing up the month. I mean, part of me would like to think that to end the month of May, it's like, is it going to try to cling to those highs again before June does something else? So I really think with this week's expiration, Frank, it might be in my best interest. I might just take the small loss. I mean, I got in for a 12.35 debit. It clearly didn't have the reaction after 3 days of trading from late last week. I mean, I can sit and do nothing and hope that it goes another $4 to the downside to get myself back to break even on the downside. Here's where it gets ugly. If all of a sudden snow has a good week to the upside, that doesn't help my position, because for the upside, I needed to get above 167.50, which is all the way back near that high.
Right.
I'm better off getting paid to the downside. And it's that decision that sucks to make. It's like I'm down about $3.50. If I close it out right now, I take the loss. But there's two ways I can look at that. I can take the loss and move on and not worry about it. or I can sit on it for the rest of the week and hope that it goes down. Because if it goes down, great, I'll make it to break even or maybe make a couple bucks. If it doesn't go down, I'm going to watch 1235 that's now trading for 880. I'm going to watch it go to trade for 7, for 6, for 5, for 4, and I'm just going to keep taking on more risk for that trade, which I think is unnecessary. So I'll look at it right now because honestly, like I said, I might just think it's better to take the small loss. So my position on SNO, let me get the symbols organized here. So on SNO, I took a 1235 debit and it's trading for, survey says, 844. If I can get out of this for like 850, that's okay. That's less than a $4 loss. Let me see if I can close it out for 850. Filled for 850. I'm just going to close it, dude. I hate taking the loss, but I had a good week last week. I think I only missed 1 out of 4 earnings plays. So net, it's fine. I'm just going to take all these down for a second. So while I manage these trades and close these out for 850 or better, let's try to get like 855 maybe. Nope.
I'm at break even right now.
Are you? Okay, good for you.
So I'm hoping
that's not bad.
I want it to go lower. If it could go like a point lower, that would be great.
Yeah, I agree. I mean, I'd love it to go lower, but like I said, I'm in a position where I paid $12.35. I'm already down, $3.75, $3.80. To me, it's just better to just take it off, put on some new earnings trades this week if I like anything, and go from there. So 850. Let me see if I get 851.
Fair enough.
Yeah.
I want to price out Ulta and possibly Burlington.
Burlington, the old coat factory, huh?
It's a expensive stock and it seems to move heavy.
Yeah. Okay. Go. All right. So let me just do a little bit of management here on these positions. Taking a, don't be filling me less than 850 now. Come on. Oh my gosh, you turds. All right. I got to finesse this a little bit.
It's hard to do this while streaming live.
I know. It's all. I mean, I'll talk. I usually have no problem doing that, but it's not the most exciting thing when I'm just playing around with like 1 cent at a time trying to get filled.
Yeah.
All right. Oh, dude, come on. 840, 845. I mean, I don't want to take. I'm hoping to avoid the $4 loss here, but all right, filled to 840. All right, I got 3 more accounts to throw in here. Give me a second. And then what do you want to price out first? You want to take a look at Ulta first?
Yeah, let's do that.
All right, I'm going to go 840 here. Get these filled and over with.
Are you looking at Costco at all?
I am. I was looking at it this morning with Nick. It's expected to be about a $35 to $40 move. I will probably look at pricing in something on Costco. I do think that Costco, similar to what Walmart did, is I think we could have some surprise expectations. By the way, as I'm doing this, we are dropping in price on SNO a little bit because I just got a much better fill on that one. But anyway, you might get that little move that you need if you're break even or better. Now it's up to 863, so I'm getting about a 10 to 15 cent discrepancy. That's 860 didn't fill. Let me go 850. Kind of way back where I started. 850. All right.
So Costco, what is it, like 800? It's 808 right now.
It's 808 right now. I'm looking at the IV for Tasty has about a $35 move expected. Oh, come on, you idiots. Now it's an 830. All right. Oh my gosh, fill me, SNO. You're killing me.
So I want to tell you about an idea that I was thinking of while in Europe, and it had to do with a while ago, I got kind of burned on Amazon, and it was an iron condor play. But here's what happened. So I took the trade early in the week, and then the days leading up to it, the contract got way more expensive because of higher implied volatility. So afterwards, I held the trade. Afterwards, price didn't move too much, and that implied volatility just went away, and the price of the contract just decayed. So I'm wondering, when you're expecting a heavy mover, say on Costco or Intuit or whatever, taking that trade early in the week, or say maybe a week before it even happens, letting that contract get expensive in the hopes that you sell out before earnings and close at a higher price because the volatility is higher. The implied volatility is greater than it was.
So are you talking about being long the option or short the option?
Long.
So long. So how much earlier do you want to get into the implied volatility? I mean, well, you still need movement. You still need movement. So even so, this is what happens around earnings, right? IV swells around earnings, but it doesn't necessarily mean it doesn't translate into movement. So like Costco has earnings this week, the IV's at 56. A month ago, you know, in the middle of between earnings, I guess it's probably trading at 25 or 30. So to get into it, I mean, has it moved that much? I mean, sure, it's gone from, let's say, I mean, from April's low. I mean, the thing's up $100, man. I mean, that's a pretty good move for the last, let's say, 30 to 45 days of trading. It's up around 15%. But coming into earnings, if you're long the option, I don't love getting in too early because all of a sudden you build a bias into that long option. I mean, I look at it this way. You know, you and I've talked a lot, you know, online, offline about earnings plays, and it's earnings. I swear is still a coin flip, and it's a coin flip that has multi dimensions, right? It's a coin flip where good news can be a good thing for the stock, good news can be a bad thing for the stock, bad news can be good news or bad news, but it's also about how much movement do you see. And this year, I've noticed that most stocks that I've traded with earnings have been better to be long than short, meaning they've gone beyond the expected move. And that actually is what I'm trading, right? So when I do my style of trading with earnings, I'm typically trying to make, so let's talk, you want to talk Costco right now, or you want to talk Ulta?
Either one's fine with me.
Okay. So I pulled up Costco already. Here's what it looks like from an earnings standpoint. And what do you mean this is not live? Oh, this is totally live there, Tommy. No, it's live. Okay, so average earnings report is around 5%. Now, here's what I need to double check. Is Costco worth trading? 5% seems to be a bit of a stretch. Now, 4%, probably a little more realistic for a stock that's trading at 807.89. So let's go 4% here. So 4% times 807.89 is a $32 move. So that changes my bracketing a little bit. So Tasty has it expected to be about $35. So if I go out to June 7th, we're looking at about a $36 move with implied volatility. Now, the Ivy ranks 55. That's decent. I was looking at doing this. If I did a long strangle 810 by 805, I'm going to have to pay $36 for this move. Now, what I could do is how expensive would it be if I did $30 wings to sell the outside of this? So if I did 810 to 840, if I sell that, and then 805 to 775, okay, I can turn a
21. That's a lot.
Right. Like it's still an expensive debit. And here's what sucks about it. I mean, I would still risk all of that as a debit. So, I mean, I think here's what I expect. This is probably a high probability profit. I could pay, $21 with a probability of making a $30 move, right? I think that Costco has it in it to make a $30 move up, a $30 move down. That means that my $21.60 debit can turn into an $8 or $9 profit. The problem is if somehow it doesn't work out that well in my favor, I have way more risk on the trade than what I have in reward. So it's almost better for me to say, okay, well, 810 to 830 is what the expected move is. We're still looking at 35. I mean, we might as well make it big enough where, okay, if I go 840 to 850, now I have a $40 move. And from here, I go to 765. No, I paid $26 for this, but the expected move is $32 to $36. Now, I think if we have a 5% move, we can go $40. But let me go back to this because before I do all this stuff, I want to make sure that how many times have we at least hit 4%. 4 to 5% is what I need to see on these last 10 earnings reports. So let's go to this really quickly. I'm going to cut it off after 8 days because that would take me into next Friday's trading. So if I do this, and that's my cutoff, did we get to 4 to 5%? Yes. Did we get to 4 to 5%? Yes. Did we get to 4 to 5%? No. And this one is a yes. That's at 4%. This one is a no. This one is this is my least favorite, Frank. When it gets to the percent I'm looking for at day 8, I hate that because that means you're forced to wait the entire time until expiration. I don't like to do that, so I'm not going to count that one. This one gets to 4.25. That one's okay. Okay, this one at 1. This one does not get there. This one's at 2. This was not good enough, and this one gets there This one's good. So I'm guessing it's 5 and 5. 1, 2, 3, 4, 5, and 5. So here you go. 5 times it hit the expected move. So that's a check. And 5 times it didn't. That's a no. What does that mean? It's a complete toss-up, man. So you got to ask yourself a question. For a 50-50 toss-up trade, are you willing to put $2,500 on the line?
Nope.
No. And granted, this is not the only way to trade Costco. I mean, we talked about this. I made money on this last week with NVIDIA. I cleared over $1 credit on NVIDIA by doing this. Okay, so we expect to see like a $30 to $40 move. The problem with Costco is I'm getting $5 spreads. Everybody can see that. But once I get beyond $8.15, it goes from $2.50 spreads to $5 spreads. So if I'm looking at about a $30 to $35 move, if I go $30 out, okay, that's going to put me right around $8.40. If I do an in the money call, okay, in the money bull put spread, $8.40 by $8.35, I can get $3.75. Okay, I'll prove it's live. Your message is about to appear on screen. Yeah, Jen, you got him. You got him. $8.40 by $8.35 bull put spread. I get $3.70 to $3.75 credit for that trade. Now that means that
recording.
Yeah, I mean,
this whole thing has been a recording.
We're all in a simulation, right? It's all recording. $8.40 to $8.35, I can get $3.70, $3.75 credit, which means I'm collecting about 75% of that move. $3.75 divided by 5, I'm getting 75% premium on that trade. Now, here's what I'm going to try. If I can take this trade on Costco and we go at least, $30 or so. If we go $30, then this trade should be profitable, and I can turn, hopefully, if I do the same thing on the downside. So 807, let's go down to 775. So do the 775 by 780. So I could do this trade. And so looking back on NVIDIA, looking back on Netflix, looking back on a couple other credit spreads that I played, I'm only collecting $7 on this trade. Now, I say only $7. That's still pretty good. But the reality is I want to try to collect $7.50. I want to try to collect $7.75. I want to try to make a little bit more premium. So it's actually better on the put side. If I do the bull put spread, I'm getting more premium on the upside than it is on the downside, unfortunately. So if I do an in the money bear call spread, I'm not getting nearly the same credit, which kind of sucks. So if I wanted to go lower, I could do this. Okay, now I get worse credit. What the heck? How's that possible? That's interesting. So I get more credit here by doing a 775 by 7. Oh, that's only $5 spread. Okay. Oh, I know why. So 770 by 775. Yeah, what the heck, man? That's kind of ripping me off. So this is better. I might take this, Frank, just because we're live and I don't mind taking this trade. If I get 750 on this trade, I'm going to take it. 750, I'll take it.
So you're trying to get price to stay within those?
No, these are credit spreads. I'm trying to get price to move past this. And the reason why is I have seen so many earnings reports this year that have gone at least to the expected move. So if price moves past 840, this becomes my in the money credit spread finally starts to pay me the high premium.
Yeah, but you're selling puts way above price.
That's correct. So it's an in the money bull put spread. So what that means is on a $10 risk, I'm only risking about $2.50. I'm comfortable doing that. That means worst case scenario is I lose $2.50, but it's easy for me to take a 750 credit. I mean, look at it right now. If I can get filled for like 765, 775, I'm going to take this trade. So let me see if I can get filled for 7.75 and take this trade. And this is playing right around the expected move. If we go beyond that, great. If we don't, I'm taking a really small loss. So let's go here. Let me see if this will fill. 775 pending order. It's working. So it's not filled yet. So the mid showing around $7. I'll do 750. That's my final offer. I'm not going any lower than that because I want this to be mostly credit. So let me see if I can get filled for 750. Nope. So I don't love this. I'm going to leave it for the day. So just to walk through this trade, I'm trying to make it cost effective, right? I could do the earnings play. I can play the long side. And I could confidently take a trade on Costco, pay $22 for it, and probably get a $25 to $30 move and make a small profit. So if I have the capital to do that, which I do, I can take that trade all day long and carve out a couple of bucks. The problem is, what if it doesn't go $30? What if it's a 1% move and it only goes, $8, $8, $9, $10? I watch my $20 debit turn into $10 credit, and I lose, $1,000, but I'm only trying to make a couple $100. So to me, it's not really worth the trade. So I'm going to try to do the cheaper route, which is credit spreads. If I can get filled for something like this at 750, dude, I'm happy to take the 250 risk. And this is what I do in all these trades. The day of earnings or the day after earnings or even into next week, if price is somewhat above my bull put spread or below my bear call spread, that 750 credit is going to be trading for 650 debit, $6 debit, 550 debit, and I can take 1 to 150 net profit. So all I'm saying is I'm just trying to flip it around a little bit and make it a more cost-effective trade. Still play the expected move, and it just becomes an easier way to hopefully collect a few bucks. So do I like it? I like it enough to place it. I'm going to place the 750 credit. So similar order. I'm going to throw this in for all my accounts here. So 9732. And then
You're essentially taking two verticals, except instead of calls to the upside, you have puts to the upside. Correct. And calls to the downside.
Correct. Yep. So they're deep in the money credit spreads. And I'm trying to take that deep in the money credit spread total at $7.50 credit. If that shows $7 or $6.50 or $6, that's profit. Because if I collect $7.50 up front and I close it for $6.50, I still keep that dollar net credit. And that's all I'm trying to do is walk away with $1 or more. I'll be happy. So let me see. I think I just put an account here that's working. Okay, so similar order. Let me get these in for the other account. So 9111 there. And I'll see if this fills today. If it doesn't fill today, then I might just revisit this or might cancel them if I can't get the fill. 7634. Okay, similar, and then 151. Similar, and 9072. There we go. Okay, so they're all pending at 750 or better. They're roughly $30 or so out of the money. Or I'm sorry, $30 in the money. So I'm doing the bull put spread here. And all I need price to do, so this is my bull put spread. If price blows through earnings and all of a sudden Costco's trading at 850, this should be profitable while the other one is a small loss. And as long as this is profitable for me to carve out, let's say $1 net credit or better, I'm happy taking that trade. And that's a way more cost-effective way to take the trade with low risk. So that's my plan on Costco. I'll see if it fills. Let's do another one together while we're here. Do you want to do Alta?
Yes, let's do that one.
Alta's trading at 382. Interesting. So I'll look at the chart first, and the first thing that I see is my concern would be we have very little downside, in my opinion. I mean, this has come back down to a level of a pretty strong support at 370. I mean, I don't know. I'll say this, dude. I think I'm better off on an Alta play going long based on daily and weekly oversold conditions. I mean, we have dropped like a rock from these highs. I could make it a cheaper play by just going one direction. Okay, not a shout out.
Buy a call or
probably
bull
do a
vertical or whatever.
Yeah, I was gonna say a bull call spread. I just think that technically we're due for a little pop to the upside. It's just, but again, if I pay for the option, I got to make sure the price moves to cover it. So even if I did a call option, doesn't mean I'm right. I mean, and I certainly don't want to pay a ton for a $380 stock. So I don't know. Let's take a look at it, right? So let's go Alta. Let's just do the process here. Alta. I mean, the implied volatility should be pretty darn high because it's been a massive seller. So this is probably above 50. Yeah, I mean, sheesh. The IV rank is 107. There should be plenty of premium to take on this thing. Alta's earnings, you're looking at earnings after market Thursday. So I'd have to go out to next Friday, which would be the 7th of June. Happy early birthday, my brother, by the way. All right, so let's go Alta. So Alta, I think I'm on it right now, but there it is. So we're looking at an implied move, expected mean. I see 10.38%. But again, I'm a little concerned because I think that's a big number. to look at 8, 5.65, 5.5, 5.2, 5. I mean, dude, when's the last time we hit 10? That's way out there. So again, if I go, okay, how many times we hit 10%? We're going to go back to the last 10 earnings and see maybe 2 out of 10. But if I did something a little bit more reasonable and said, okay, can this go 6%? Maybe we hit 6% a lot. So let's try it. Let's go. Let's say 10%, and then let's cut it back to 6% and see how many times it gets there. So percent. So post earnings open 10%. We're cutting it off at 8 days. So this one gets there day 1. This one gets there day 1. How many times to 10%? This one does not get there. This one gets there. This one does not get there. This one does not get there. This one does not get there. This one does get there. This one does not get there. And this one does not get there. So you have 1, 2, 3, 4 yeses and 6 nos. That's at 10%. Okay. What if we said 6%? Well, maybe that's different. If I cut it off at 8 days, how many times do we get to 6%? Well, we did it there. We did it there. We did not do it there. We did it there. We didn't do it there. Oops, it's backwards or not straight. We didn't do it there. We did not do it there. We did not do it there. We did it there. We did not do it there. It's the same, dude. This one by day 5, we get to 6%. So this one's better. This is now 5 and 5. So it's not great. The good thing is the IV is high enough that we should be able to get some decent premium for this. Here's what I would say. Look at what Tasty Trade has in the platform, 32.75 expected. Now, if we calculate the move, we're trading at 383. Okay. I said if we did 6%, that'd be like very cost effective. 6% on a 383 stock, we're looking at about a $23 move. That's on the low end. The average move should be over 10%. So over 10% on a 383 stock means we're looking at $38. So between $32 and $38 is probably what Alta can do. Okay. Now, because it's a $300 stock, what would you like to do? If I priced it out this way, Frank, I don't think that that's going to be a good play. That's more expensive than Costco. That's
32, yeah.
$32.50 debit. That's essentially the same price as Costco. I'm not interested in taking that trade. If we went up, $30, 385 to 415. I mean, if I did a 420 even, or I did the 380 by 350 or 340. So let's go $40 on the, let's make it symmetrical. Let's go $40. So I could pay $25 for what I would expect to be about a $30 move. So this shows that I can make a lot more money if we have a blowout move. But again, if it doesn't go the expected move, I'm going to be on the hook for a $2,500 trade that may not get there. So again, probably easier just to say that we're expecting to see about a $30 to $35 move. If I'm at 385 roughly, and I go to 415, if I did a bull put spread right there, for 250, this is crazy. I don't think this is going to fill either. Let's do a $5 spread. So I could get 375 or 380 on a $5 spread. I could take that trade for a very small risk. On the downside, if I did 385, let's go to 350. So same thing. If I got $7.50 total out of a $10 max risk, I'm comfortable with that trade. That's the only one. That's the only one I see myself.
I don't know. I think it's going to move.
Okay.
I think it's going to move this time. The past.
That's a bold, dude. That's bold. That's a bold claim, though, right? It's like I think it's going to move. Well, we always think it's going to move. We want it to move, but what if it doesn't? Do you want to? I don't like the long side of this trade. That's all I'm saying. I don't want to throw $2,000 to $3,000 at risk for what I think should move. But look, dude. The last 10 earnings, we had 4 out of 10. If it was 1 out of 10, you'd say like, well, maybe this one time it will. It's like that's kind of a gambler's fallacy. So I'm going on what I see numbers wise. I want it to be cost effective. I just think that options are a bit overpriced for this volatility. I'd love to see it move, but like I said, technically, it depends on where we're at for this market cycle. Something's wrong with this stock when we have these big swings. Like, why is the market as a whole up and Alta's down? What is it about this stock right here that we're down 35% for the year? So what is it about Alta that makes it so unattractive to be a position right now?
Well,
You know?
listen, I'm looking at the last 4 earnings plays,
Okay.
and here's what happened. We closed at 563 and we opened at 503. So that's a 60-point drop in
Yeah.
one day.
Yeah,
And then
that's true.
the earnings play before that, on earnings day, we closed at 427. We opened at 471.
50
And that was
bucks.
one day.
Yeah.
So that's a 40 something or 50-point move.
Agree.
The one before that did not really make the cut. That was probably like a 20-point move. So not a good move there. And then the last one, the fourth one, we closed at 486. Then we closed the next day at 419. So I don't know. To see this stock move at least 30 points seems kind of good if you're looking at the last 4 at least.
True. So I guess this would be my concern because we're sitting right here. I would almost need to see. I think the positive side is better than the negative side because to me, this and I'm just talking technicals here. If this goes down, part of me feels like it's better to buy it if it's down. Does that make sense? Like I'd almost be willing to say, look, I like this stock kind of as is, where I could just do a simple credit spread and see if I get paid on the credit spread. Right. But if I went in the money and I played the earnings play, if I just did a bull put spread, I collect 350 or 375. I risk $1.15. If I get paid on that trade and it goes up above my earnings play, I can just keep it and let it go to expiration and see if it stays there. To the downside, I'd almost do this. If I lose the dollar, I might establish a long call option or bull put spread down here just to say, look, it's so beat up and so oversold that I might just buy it and look for a gap fill. So it's a little bit more, sophisticated than just doing an earnings play because I'd almost look at the stock as from the high in 2023 to the low in 2023 to the high again to the low again. I mean, I'm almost interested in having a long position, but could it go lower? Like, I guess. I mean, if this floor breaks, I mean, there's no reason it has to stop. But I mean, I think we could at least hold and maintain. And if you saw me pull up that snowflake analysis, it wasn't that bad, right? I mean, we're looking at estimated, so well below estimated value, earnings forecast to grow. It's positive. It's not like it's, not profitable, not making money. I mean, it's slow growth though. Forecast to grow 4.13, earnings grew by 3.8. If they had higher margins, that'd probably be a good thing, but it's retail. It's probably not making killer margins. Surprisingly, Dick's Sporting Goods is pretty good. That has earnings this week as well. Estimated value, where are we at? I mean, that's crazy, right? We're trading at 3-1. Fair value is 562 on a discounted cash flow model. So, I mean, if you got the time horizon, I'm sure alt is fine. But I don't know, bro. Let me see. What do I like? Do I like the both sides of it? Probably not. Part of me wants to do this. If I did an at the money bull put spread, okay, right here, I get $1.40 out of a 250 spread. Is that decent? It's okay.
Yeah, that's a good play.
Right?
It's a very cheap play too.
Very cheap play. I get 56% of the premium. I take a small risk on it. If I'm right, I'll make $1.40, easy peasy. If I'm wrong, I probably will reestablish the position. If I'm wrong and this thing goes down, okay, and this is earnings on Thursday, by the way. So if we have a move to the upside and I just do a simple at the money credit spread, if we move up at all on earnings, I'll get paid by Friday. So I could do this, make it even better. Let's go May 31st. If I did a 385 by 382.50, there's no way that's going to pay me that. It's a 250 spread. I'm not going to get that. I mean, I can get $1.70, dude. I'm going to take this trade. So we're trading at 384. I'm going to take this trade for $1.70. Let's see if I can get, if I get $2 for this, that's crazy. Let's find out. So here, that shows reduced by 303, $200 credit. So that's a two. Let me double check that. What just happened? Oh, fudge. Hang on, I messed that up. Dang it. I had 4 legs to that trade. I only needed 2, so that's my fault. I need to swap this real quick. So let's go Snow, SPY, Alta. So 380. Oh, so I did both. Ah, that's fine. Let me see here. I'm going to get out of this trade and just do it from scratch. I don't want to mess this up. So I'm going to get out of here I collected 252. Please don't rip me off here. 255. I'll take a small loss on it just for, oh my gosh. This is going to suck. 262. So what do I have? I have 2 bull put spreads at the same price. It's okay. So each trade, if I did just the one by itself, so let me go back to May 31st. So here, 385 by 382.50. That is paying $1. Okay, so that's about right then. I did $1.30, $1.40 per credit spread. So if I'm right, here's what happens. If I'm right and price goes up on Alta, then I will make $1, $30, $40, and then another $1, $20, $30, and my net profit's going to be $2.52. So I'll have half of that or so by this week Friday, the other half by the next week, as long as price goes higher. So that's a very manageable trade. Not that bad.
Wait, so you have one for this Friday?
I did it for this Friday because if we just have a reaction to the upside, all I need price to do is jump above 385.
Yeah.
Jump above 385, I'm golden on that position, and that'll be an easy couple $100.
Gotcha.
Yeah. So I'm going to take, so I didn't mean to take 4 legs to this one. So I'm going to take only one and just do a May 31st expiration. So I'm not going to do similar. I'm just going to go to the next account and then do this trade here for $1.45, try to get filled at $1.45 and just take this trade. So here, this will be the one that I cloned. So 9732 right there. $1.45 not filling. We'll try to get $1.40. I should take less than $1.25. I'm at least going to get half of this. $1.35 not filling. $1.30. $1.31. Okay, so now I can clone this one, go for everyone else. So 8051. Do it here. Build. All right, this is easy. So this is a pretty simple trade. One credit spread, win lose. That'll be simple. So 7634.
You said you paid it 130 for it?
No, I'm collecting. It's a credit spread. So
you're selling a.
Oh, so I sold the 385. Yep, I sold the 385. I bought the 382.50. It's a credit spread.
Okay.
And last one here. Make sure everyone gets a piece of this. All right. So let me double check those positions really quickly. Make sure every account has some of that. Alta, that's in. Alta is in. Alta is in. Is in. Is in. Is in. And is in. Okay, cool. And then this account, I'll do the same thing here. So positions, trade, 385. Yeah, I like that trade. So you might get $1. I'll try $1.40 on this one. Working. Oh, fudge. Hang on.
Let me think of. There might have been something else I wanted to look at too.
Okay. Working. Cancel this one. There we go. Yeah, let's take a look at something else. And then I got to run in about 5 minutes if that's cool.
Okay.
Filled there. All right, let me try this one. So here. Make sure nothing else is pending. Filled. This is the joy of having multiple accounts. I just had to make sure everyone's getting a piece of this trade. Good. All right, so I'll take this one here. So 385 by 382.50. Try to get $1.35.
Do you have something that can mimic your trades on all of those accounts, or do you have to do it manually for each one?
I got to do it manually. I just do similar, and then like this. If I get the trade filled, I go similar, and then just post in the other accounts. It's pretty quick. I can go through a whole order flow in probably 1 minute. So it's not that bad. But it's not great. I mean, I'd like to do one account and just, trade it all at once, but not how it works right now. All right, $1.37. Come on, man. $1.35. There we go. Got to fill it at $1.36. Okay. So I'm looking for alt to go up. If it does, great. If it doesn't, small risk. That's it. Okay, you gotta do one more.
All right. So, what do you think of Abercrombie?
Abercrombie. What's the ticker?
ANF.
ANF. Well, I think that I missed the boat. That's for darn sure. I mean, look at this piece of crap.
Yeah.
I was in AEO. This is so crazy, dude. I was in AEO at like, I think I was in AEO at like $12. $12, and I closed it out around 17. I was really proud of myself at that move. And look at this thing. And Abercrombie is even more ridiculous. I mean, I don't know what justifies Abercrombie to be up 560% since May of last year, but it is. We're now
selling
trading
shirts.
What's that?
They're selling shirts.
Selling puka necklaces, man. They're coming. They're making a comeback. All right, let's take a look at the numbers.
This is one of those times too where it looks like the move is already happening.
I agree.
You already want to be in that iron condor like days before.
Well, if it's already made, I mean, if you look at this week, if it's already made a move, like, it's up the last 3 days of trading. So yeah, this one, it would kind of be tough to be in this one now because the day and the week have already started, and we have. I mean, look again. If I'm picking a direction, like Abercrombie could blow the top off, but I think this is going to fade, man. I mean, again, just looking at technicals, this and this and this, we're probably going to drop. The issue is if I call the top now, this is what can happen. Abercrombie could have great earnings, blows the top off, and then it fades it all the way back down. I'm better off waiting to see if we have an earnings that's positive and then fade the heck out of that move. I'd much rather do that than be in the way right now.
Okay. So
again, if I did a bear call spread right now and played the direction, we could get that right, but we have the risk on the trade in case the thing goes up. But I would say this, if Abercrombie comes in and it has a blowout earnings, I would fade that move with a bear call spread and possibly get paid over the next 20 to 30 days pretty easily. I mean, I don't think this is a sustainable rally. Otherwise, Abercrombie is going to be on the same breath as freaking NVIDIA. Who's talking about Abercrombie at 500, 600% gain? It's like nobody, but I mean, what does it look like on paper? Let's want to find out. So ANF, Abercrombie and Fitch. I mean, it does check some boxes. So trading well below estimated value, forecast to grow 10.51%. Earnings grew by 6,500% last year. That's insane. Shareholders diluted, insider selling in the last 3 months. Technically, it's way overbought. Way overbought. Problem is we can still have that blow off top before I fade it. So I probably won't do anything on this until we have earnings because, again, if we go up with earnings, I'll probably fade that move. Or I'll just do like an out of the money bear call spread or an at the money bear call spread. But I want to see if earnings, maybe push it up a little bit more, creates a gap, and then I fade that into the gap fill. So there's ways to trade that. But let's look at the numbers the way we kind of price them out really simply. Let's go ANF here. ANF. And we're looking at, I mean, these are pretty big numbers, dude. 18% average. I see, plenty. I see plenty of 20s, 18s. That's I could calculate that. So 18.39. Let's just say 18%. Okay, so 0.18. The stock's trading for 152. That's about a $27 move expected. Let's go to ANF here. So we're looking at a move by Friday, $20. If we go out to when are earnings, Frank?
I believe it's
Wednesday for market.
Tomorrow morning.
Okay, so you'd have Wednesday, Thursday, Friday to manage if you just want to go out to the 31st, or we could go out to the 7th, and it'd be slightly more. So that's $21 expected. I'm looking at about 27. Interesting. So the IV here is a little bit more conservative for Tasty versus what I'm seeing on the actual earnings report. That's at 18%. So I'd be comfortable saying like we're going to move probably $21 to $25. What do we pay on this trade? So if I was long on Abercrombie and Fitch, I'll do a long strangle. this one actually is possibly priced for a decent report. Now, I kind of hate the fact that we're sitting here in these crazy overbought conditions and we see it blow out the top by $20 to $25. But that being said, if I went to 175, that'd be $20 there. If I went to 180, now it's $25. If I did 190, let's do $30 here. I go $30 this way, and let's do the 120. $30 that way. That's crazy, dude. So the expected move is about $20. Okay, that's by next Friday. I just don't really want to pay that much. I can make it about a 1-to-1. I think the probability is pretty high that I can turn this into profit. So my risk, my reward is about 1-to-1. The issue is if we don't move 18%, I'm not even close to profit, right? I mean, if we move this percentage, what's that?
Like, are you willing to put up 15 or 16 per contract?
I mean, I've done it. I've done $30, $40 on some of these trades if I feel that the numbers are solid. Now, here's the other kicker. How many times over the last 10 earnings have we at least hit 18%? Because if it's 6 or 7 or 8, okay, fine. I think that at least shows like this likes to hit expected earnings. But if it's only a couple of them, that's what we're going to find out. So this has to be a double-digit mover to the tune of 18 to 20% by day 8. So this one, 15%. We need to get 18%, so that one doesn't count. This one doesn't count. This one does get there. This one does get there. This one does not get there. Okay,
why not just go for a lower percent then? What about a 10-point move on either side and get like $6, $7, $8 per contract, risking, because that's your debit, and then you make probably, if you say you risk 600, you would make like 100 if you were right.
Yeah, if you put your sell legs in front of a move that's going to blow it out, then your delta's going to change so much and your value is going to change so much you're going to have to wait till expiration. So example would be if I tighten it up. So if I took this, if I did a long strangle here and I said I'll just go $10 out. Okay, now the probability of profit is going to be really, really high, but you're going to see that my risk reward is still, let me go to 140 here. So if I did a 155 to 165 and a 150 to 140, I'm still going to pay $8 for that move with a $10 expected move. I mean, this is a very backwards reward to risk. I'm risking 800 to make 200. More than likely it moves all of $10. But the problem is because these deltas and values will change so dramatically with a $20, $30 move that I won't make any money until the day of expiration, because these values will shift so aggressively that the sell premiums are going to be way off. I'm not collecting nearly enough premium on the sell side to offset the trade. That makes sense? So I mean, it's a high percentage trade. I mean, you've got a 72% chance of profit, which is great. The issue is because these sell premiums are going to change so dramatically, more than likely that I won't make my $2 because I'm paying $8 for it. So I won't make my $2 until the day of expiration, and price still has to be where? Price has to be beyond this level or beyond that level. And that gives us, I guess you could do that for Friday's expiration and take the chance, but you're still risking, $7, $8 on the trade. And if you want to go out less than that, it's the same thing. I could tighten it up and say, okay, well, let's buy the 155 and take it to the 160. And then the 150 goes to the 145. Well, it's the same thing. I pay so much for that trade. I have to pay $4.60 to make 40 cents profit. No thanks. Is that what you're talking about as far as the move?
Yeah.
Yeah. No thanks.
That's what I was wondering. Because I guess, if it moved quickly 10 points above or below where you needed to be,
right,
the price will still not be that profitable yet, because you got to wait like another week for it to start churning profits, I guess.
So this one could be doable. I was looking at a move around $20. I might just do a credit spread in this one. So if I can get 3 to 350 for this one, 350 is good. A 170 by 165 bull put spread. This one I could get 180 out of 250. That's even better, I think, percentage wise. 180 out of 250. So I get 70. If I get over 70% of the premium, I'm pretty happy with that. What's 350 out of 500?
So you would want to sell this at some price below 180? Is that what I'm?
Well, so this is if I just did earnings play. If I just did an earnings play, this is what I would do. I would go in the money for the bull put side, in the money for the bear call side, and see if I can collect enough premium up front that it blows up here, and I can have my credit received. I can just take a portion of that off and still make like $1. So here's what if I stick to my guns on the original thought would be this. I kind of like to see Abercrombie do this, blow out earnings and then get short, just because we are so overextended that, I mean, I get it. It's the stock market and you shouldn't call tops and these markets can go to infinity. So I'll put on the defined risk trade. But you know, if I don't take a trade and earnings does this, then I miss out, right? So, I mean, if I play it with the market making a surprise move, if I did about $20 up, so we're trading at 152.97. If I do about $20 up and then put me around 132 to the downside. So if I did a 170 by 167.50 and a 130 by 133. So if I did both of these together, I don't like how these are uneven. I'll go $5 apart, 130 by 135. So I think this is fair. I could do a $7.50, 7.75. I could do the same thing as I'm doing on what we do Costco earlier. If I did get that trade filled, and if I dropped to 130, let's find out. I mean, that's a big move. That's out of the expected range, which I don't love. Could I do like a 135 by 140? Let me see what that pays. That's okay. 130 by 135. I mean, we'd have to have a pretty big miss to the downside if that's the case. Fudge. Well, if I can take the trade for 775, I'll take the trade. So I'm going to do this for 775, see if it will fill. So edit. I'll go 7.75, see if it fills. That's a small risk on the trade. Not filling. Can I get 770 on the trade? No. Can I get 7? I'm not going to take less than 750. I think I said this last week. It's going to fill at 750 probably. 760 not filling. 755 not filling. Come on, let's go. Everyone that's in my equities on demand class, by the way, I'm pretty sure most of them are here. We could just go in a little bit longer here, and then I'll switch over to the EOD trading room. 750. Not filling. Oh, fudge it. I'm going to put the same thing. Costco, 775. Try to get filled. I'm just going to leave it there. If it gets filled, great. If it doesn't, I'll cancel the order. So I'm going to put these in, see if they get filled. I'm just doing credit spreads, dude. I'm going, look, we're on the tail end of earnings as well. I think the market has had, look, we had a good run with Apple. We had a good run with NVIDIA. We're sitting at these highs. I could see this slow, creepy drift towards the end of the month. I see a bigger direction out through June, though. Like, good or bad. I think like the market needs like a renewed sense of either, hey, June's going to do the same thing we did in May, or June's going to be a correction. I just think coming off a holiday hangover, maybe not much happens this week. And earnings, there's not a ton. There's only 100 companies. So I don't know. And it's not a Mag 7. It's not a Fab 4. It's just stuff. So yeah, it's Costco, and yes, it's retail, but it's just not awesome. Just my thoughts.
Okay.
All right.
Fair
So 9732. All right, let me get these. Let me throw these in here to pin. 9732. Similar 8051. Okay, just a couple more accounts here. Similar 764. And I just have to remember that I might have to cancel these trades by tomorrow if they don't fill. Because if they could clearly fill during earnings because the move's going to be one way or the other. Like, I don't want to get filled post earnings because they're going to be crappy positions.
Yeah.
So let me try this one and make sure every account has at least a pending order. So pending, pending. All right, I think we're good. All right, dude. So yeah, they're pending. Costco credit spreads, ANF credit spreads. What else did I do here? We did another one, right? Alta.
We did do Alta.
So yeah, credits. This is just a bullish play on Alta. So if I don't get filled on Abercrombie & Fitch by later today, what I'll probably do is cancel this trade, just wait for earnings, and then you and I can talk about this, online in session, offline. But this is what I'd like to see. I'd like to see Abercrombie, since this momentum is pushing up. I'd love to see this thing gap higher, and I would fade that move. And I might do that with the debit spread to make a little bit more money, or I just do like an at the money credit spread and try to get paid on it for a week or two. Nothing crazy. But I'm just picking my battles, man. I mean, I've got ratio spreads going. I've got some ownership positions. I got some naked puts going in the next like 3-4 weeks. So, I don't need to do a lot in earnings. It's like make a few bucks, that's fine. But I think I don't want to overplay my hand. That's all.
Next time you got to tell me about ratio spreads. We have more time.
If you want to spend some time on it this week, we'll jump in a session. We can do that.
Okay, cool.
All right, dude. I'm gonna run. I'm gonna run in my trading room. But hey, thanks for jumping in, man. It's good to see you.
Yeah, good to see you too, dude. I'll see you tomorrow, Wednesday or Thursday, Friday.
Sure, sounds good.
Today's Tuesday, right?
Today's Tuesday.
Okay.
All right. Hey, everybody. Thanks for watching the live session. We're live. All right.
We are live. And now we're about to not be.
That's right. Now you can watch the recording.
But yes, thank you. Thanks.
All right. Thanks, Frank. Cool. I'll see everybody. Thanks.
Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30, for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below.
Thanks again for watching today's show. Our goal at A1 Trading is to share free value to you, our audience, through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more, lest ye walk the plank. Join our crew as we head out to go long on gold. See you next time.